Hi everybody, welcome to the Infinity Futures YouTube channel. In this video, we're going to talk about some of the arithmetic studies that are based in Sierra. This is probably one of the least exciting sounding studies, but one of the most useful. And I want to explain, how they can be put into practice. So let me explain first what we're looking at right here, and then I'm going to show you how you can recreate something similar. All right, so on the left side, you've got an E-mini S&P daily chart, and on the right, you've got a NASDAQ chart, okay? Now, under each one of these charts, there are a couple of studies. On the left side, you're going to see one of the studies we have called study subgraph multiply and a result in the form of a single line. And what this is I'm multiplying the value of the E-mini S&P by 50, which is the dollar value for each point, which yields this number, which is around 114,000. And then on the NASDAQ chart, it's the same thing. We've got the NASDAQ on the right, and then we've got study subgraph multiply, except we're using an input value of 20 because every full point in the NASDAQ is worth $20. And that yields this value here of $102,000. What those values represent are the actual cash values of each of the contracts. So when you're trying to do comparisons among the indexes or any commodities, a lot of people overlook not just the margin requirement or the current price, they overlook the actual cash value of the contract. And the best way to make a comparison about which one is advancing farther or faster than the other, or if there's a disparity between the two that seems irrational and so forth, is to look at the underlying value of the instrument, not just the margin requirement or the current price. So again, what we're displaying here is the S&P on the left, the value of the E-mini S&P in dollars below that. Then below that, I have overlaid the result from the NASDAQ chart onto the S&P chart. So you've got the S&P cash value, the NASDAQ cash value, and then down here you've got the difference of these two. So we're actually displaying the actual cash spread between the E-mini S&P and the NASDAQ. And this value yields a line that looks like its own chart that shows you a historical representation of the disparity between the S&P and the NASDAQ futures. So the reason why this is particularly interesting right now is because the NASDAQ has been on such a tear and everyone's watching the tech stocks very closely. And people who are looking at positions on a longer term basis might be interested when this number starts to reach some of these extremes, like you can see on this chart below. So what I'm going to do here is kind of start from scratch briefly and show you how you might be able to create something like this on your own. A lot of the color settings and so forth are really, really simple. It's just getting the underlying concepts down. But once you do this a couple times, it'll become really easy. So the first thing I'm going to do is open up a new chart book. And I'm going to open up an E-mini S&P chart first. So we'll just go ESH7. And we're going to see the current price, 22.83. Now, the first thing we need to do here on this chart is add the study that's called study subgraph multiply. All right, so you're going to see that right here, study subgraph multiply. So you see there's a whole bunch of arithmetic studies here in Sierra, all in the same area. So you click on the add button and go to settings, and in the settings and inputs tab, you can pick the multiplier. So with the S&P, it's $50. So I'm just going to put in 50 and push apply, and you can see in the background we're going to get an instant reaction. What I'm going to do in subgraphs here is just make the color a little easier to see. Let's thicken the line up a little bit and check the value label. So now we're getting a behavior that looks familiar to what we saw in the other chart. So there's the cash value of the E-mini S&P based on the current price. All right, so now what I'm going to do is duplicate this chart, and I'm going to use the tile vertically option at the top to put them next to each other. And on the right-hand side, I'm just going to change the chart on the right to the NASDAQ. So I do / NQH7, push enter, and now we've got a NASDAQ chart. You can also change the symbol from the chart settings window right here. So if you right-click chart settings, you can put that in here. Now this value is not accurate because we're using a 50 multiplier. The NASDAQ's only a 20. So in the study section, we need to go in here and change the input from 50 to 20. So we'll do that, push apply, and you can say we get an instant response. This is accurate now. So at this point, the next thing we need to do, if we want to follow the example from the prior chart, is to take this study and move it or copy it onto this chart on the left. So on the source chart here, or the destination chart rather. In this case here, we're going to go to the 5-minute chart for the E-mini S&P, right click and select studies. And we're going to add a study that you've probably seen in a bunch of our other videos called study price overlay. And this is what you use to take a study from one chart and stick it onto another one. So select it, click settings, and in the study to overlay field at the top, I'm just going to pick the chart we're pulling from, in this case the NASDAQ. What study are we pulling? Nope, not the main price graph, rather the study subgraph multiply. Region 3 is correct, okay, because region 1 is the main price graph, region 2 is here, region 3 would be like the next one down. Usually with the value format, I set this to inherited and just push apply. And you can see we're going to get the instant response. So now we're getting this value overlaid onto this chart on the left. All right, finally, we need to subtract the NASDAQ from the S&P in terms of cash value here. So we're going to go back to those arithmetic studies. If you scroll down here, study subgraphs difference is what we're looking for. Study subgraphs difference. Push add. And then in the settings section, it says, okay, what's the first study and what's the second study? And that's referring to the order of operation. So the first study is going to be the study subgraph multiply. That's this one right here. We're going to use the result as the input. The second study is the overlay from the NASDAQ chart. We're going to use the result as the input. Chart region 4, it looks good. Value format, inherited, and push apply. And you can see now we're getting the difference. Again, if we want to configure the behavior of this aesthetically a little bit, you can go to settings, subgraphs, and if we want to make it look like the other chart, just thicken it up a little bit. Value label, and here we go. So now we've got a clear spread chart. This is at a 5-minute time frame. We can easily make changes at the time frame. We just have to do it on both charts. And if you go really far back, like daily or weekly or something, you want to make sure you make the charts continuous so you get lots of historical data. So as an example, if I want to make these daily charts, I could just left click on the chart on the left, 1D, you can see the text show up right here, 1D enter. Go on the chart on the right, 1D enter, and we get an instant response. All right, if you want to make the charts continuous so you get lots of data, okay, because they're only going to go back so far because we're looking at a March contract, not a continuous contract. Chart settings, advanced settings, continuous contract. I usually choose the first option, date rule rollover. You would just pick the same option on the other chart as well. Chart settings, advanced settings, continuous contract, date rule rollover, apply and OK. So now you can go back a little bit further if you want to. All right, you see the value there on the right side fluctuating based on how far back we go. So this is a really neat way for traders to compare the real value of futures contracts. A lot of times it's easy to get wrapped up in margin requirements and day trade margin and so on. A lot of people ignore the actual cash value, and especially with the indexes. The indexes are instruments that don't always move in lockstep, and sometimes when one of them or two of them get out of whack, that's something that our customers are looking for. You could also achieve similar results with energies, like if you wanted to look at crude oil versus natural gas, or if you wanted to look at bonds versus notes, or any other, the agricultural products and so forth. That has a lot of applications. So some of these studies, the arithmetic studies based in Sierra, multiply, difference, average. These are very practical and useful studies that you don't really think of too often, but they're a really great example in Sierra of if you have an idea that you're looking to implement, odds are you can use some of these unique studies to create or visualize that without doing any type of programming or development. It really is a fascinating application. So hopefully you found this useful. If you have any questions, please contact us. Just give your rep a call or send us an email. Thank you.